Hi there, welcome to Kneppy Invest. It is Sunday, the 28th of April. That means it's time for another technical update video. Not only will I have a look at quite a few charts, also take a look at a couple of tweets that might be relevant for not only the next week, but also maybe for the next few weeks, few months, even possibly even few years. Now, I'll start this after looking at these tweets. I'll start off in this particular technical update video doing exactly what I do every single week. Look through indices, commodities, have a look at Bitcoin, bonds, maybe Ethereum, maybe Cocoa Yen, who knows. And then I'll have a look at some charts. I do have about 11 charts of individual companies on the ASX that I want to have a look at. And I also might show you some of the companies that are in my trading portfolio and just talk about whether I am near selling those companies or not, particularly those companies that have been holding for a longer period of time. So for those companies that I have been holding, that holding time is approaching a year, I do have to think a little bit differently just because of taxes. Anyway, so before we have a look at charts, let's have a look at these two tweets. The first one is through or from Earnings Whispers, looking at the most anticipated earnings during the week. This is on the NASDAQ or the New York Stock Exchange, and a nice group of companies, maybe not as big as last week, maybe not, but still big. And if you just take a look at some of these names, worldwide names, fairly dissimilar to Australia. If Australia had the same thing here, I'd say the vast majority of people would never heard of those names. But here we have Domino's Pizzas, Philips, Paramount, Logitech. This is on Monday, by the way. Anything else there? Bank of Marin, never heard of that. Chegg, what's Chegg? And then on Tuesday, PayPal, Amazon. Is that Eli Lilly? AMD, Triple M or 3M, McDonald's, Coca-Cola, Starbucks, Pinterest, Caesars Entertainment. I'm pretty sure that's probably owns Caesars Casinos. I'm assuming that. SiriusXM, Lemonade, Cameco. Then on Wednesday we have Pfizer, CVS, which is like a pharmacy, Barrick Gold, Paycom, Fastly, Etsy, Estee Lauder, Kraft Heinz, Marriott International, which is hotels. And then on Thursday, Novo Nordisk, I'm looking for that one. Apple, Coinbase, Block, DraftKings, Moderna, Cloudflare, gonna go Philips, Booking, Holdings, Expedia, Wayfair. And then on Friday, Hershey. Got a wide range of different companies here, including a chocolate company and nothing else there that I recognize. Or Fubo TV, what that is. Anyway, so another really interesting week in America. We have seen share prices of some companies drop or rise by over 10%, and these are the biggest companies in the world. For instance, Alphabet rose by about 10% on a Friday because of their results. So anticipated is the right word here. So looking forward to quite a few of these, and I actually am holding quite a few of these companies. And I think a few of those companies are looking really cheap. PayPal is looking ridiculously cheap right now. And I heard someone talk about PayPal the other day on one of the podcasts I listened to. So the growth investors aren't interested in PayPal. Value investors aren't interested in PayPal. So it's sort of in between the two. And that's why it's really good value right now. I think the PE ratio is something like 11 or 10. Now, I could be completely mistaken. And the chart actually is looking good, PayPal. I might be a little bit biased because I am a shareholder of the company. I've been a shareholder of PayPal for a while now. So PayPal. So the chart this is the 1 hourly chart. So I'm going to have a look at the daily chart. So yeah, so the daily chart does look like it's turning around, and the P ratio will be shocked if it's anything 16.67. Yeah, I thought it might have been a little bit lower than that, and I think that could be on the back of revenue still climbing. Yeah, so it's still like a growth company, in my opinion. Still has lots of room for growth, but it's almost being valued like a non-growth company. Anyhow, I had no intention of looking at PayPal in this particular video, but there you go, doing stuff on the fly. And the other tweet is something I do look at all the time. A Twitter account I look at all the time. Gibson letter. I am probably not pronouncing that at all right. And you get a lot of interesting information, a lot of interesting thoughts from this account. The Fed is in a lose-lose situation, and maybe one of the reasons I like this particular Twitter account is because well, what they think is fairly similar to what I think. And this particular tweet has been quite popular, not as popular as some of the other tweets, but 375,000 views. I know. Fed is in a lose-lose situation. On one hand, you have signs of a slowing economy, and consumers are paying historically high interest rates. Not sure about historically high interest rates. I'd say more normal than, if you look at the history of interest rates, it's more normal than historically high, but maybe I'm wrong. On the other hand, inflation is also rising, or rising again, and the Fed is risking losing credibility. Meanwhile, US debt needs a record $35 trillion, and the US government needs lower rates more than anyone, which is true. Not to mention there's a presidential election months away, and credit card debt is above a record $1.1 trillion, all while multiple wars have broken out, sending oil prices to $90, and global supply chains are messed up. Yeah, they're still messed up. What would you do if you were the Fed? It's true. You got rising interest rates. Inflation looks like it's rising again. Well, historically high. Well, apart from the word historically, it's high interest rates compared to what we've seen over the past 5 or so years. Inflation is rising again, but the main thing here is slowing economy. Slowing economy and rising inflation is bad news. And in those sort of situations, when you have stagflation, no one knows what to do. I'll be honest with you, no one knows what to do. So really interesting times ahead. They've probably released another tweet. Yep, this is exactly why the Fed continues to take a meeting by meeting approach. They cannot commit to a specific path because there are too many variables. The Fed's job is far from done right now. Well, there's Adam Taggart. I also like Adam Taggart. Putting aside the argument for market-driven interest rates, a truly dependent or independent Fed that honestly cared about price stability will raise rates, allow recession to occur, to remove asset price froth and cleanse investment or malinvestment. Painful year to two, but then much more sustainable. And I actually have no problem with that particular comment from Adam Taggart. We just are in a situation where the governments and central banks are so reluctant to put us into recessions. But recessions can be really healthy for the economies in the medium to long term. And if you keep suppressing the economy going into recession, it's actually bad. But the government doesn't want us to be or go into recession because they'll be voted out, more than likely. And the Fed is unfortunately being driven many more factors than just their dual mandate. Their dual mandate, what is it? Low unemployment and low inflation, or unemployment and inflation within ranges. We've got that really low unemployment, but they have yet to control inflation. And the way they think they can control inflation is by raising interest rates, which will raise unemployment. So yeah, it's a tricky balance what they have to do. And to be honest with you, governments around the world aren't helping. Without doubt, our next budget in Australia is going to be stimulatory. That's exactly what we don't want to see. When inflation looks like it's being more sticky, that could actually increase inflation, increase interest rates, and the government, more than likely, even if there's a change of government, will blame the Reserve Bank when it's their own fault. And the only reason they're doing that is so they can get re-elected, and they're not even thinking about the long term. They're just thinking about one thing, getting re-elected. The politicians and the parties of this country don't care about the people of this country and the country itself. They just care about one thing, getting re-elected. We have to realize that politicians in this country, and all countries really, just don't care about the country they are serving. They only have one thing they care about. Anyway, I would follow Chair Volker's lead and publicly insist to Congress and administration, and which Congress administration is in power in 2025, that inflation comes from budget deficits, and the only way to fight inflation is by reducing deficits and balancing the budget. I don't know about that. I don't know about that. So it's interesting. The Capizzi letter replies to all comments, it seems like. Anyway, let's get on to the technical update part of the video. My rant is now over. You might understand that I have zero affiliation with any political parties. I think they're all crook. Well, no, not crooks, but I just don't believe they have our interests at heart. They care about one thing and one thing only. I'd actually say they care about two things. Well, they care about one thing only, and that is their own wealth. And we can see that because politicians have the best superannuation available. It's by far the best super. And we can see just by their policies. Policies are put in place to help them and their rich buddies who give them money so they can get re-elected, so they can become richer and more wealthy in the future. They don't care, again, they don't care about the future of this country at all. They just care about themselves. Now, sometimes they align. The future of the country is important because the future of the country can make them more wealthy. So why is there never or not been any policies to deal with the real estate problems we're having in Australia right now? Because the majority of politicians own multiple real estate investments. They're not going to do anything to destroy those investments, are they? That's why we're having problems. And in fact, I think it should be, I think it'd be a good thing to, if you do become a politician, you can't have any of those sort of investments because it does bias. They will make biased decisions, which is, or might be a little bit harsh, but I don't. Rant over. I implore you, rant over. Let's go to the technical analysis part of the video, and that's paper. So let's start with indices. I'll start with looking at, we'll start with the week. I like looking at week when it's indices because I do this video on a weekly basis. And last week it was down, the XJ was down 2.84%. This week, flat. It might have seemed like a bad week because Friday was down big, but we should have an okay day on Monday because of what happened on the American markets, but just okay because Dow Jones, and I think we followed the Dow Jones more than the NASDAQ because of the makeup of our indice, which is banks and crappy companies. Yes, I'm calling all the big companies, well, not all, but most of the big companies in Australia are crappy companies. They're not good investments. And the way I define good investments is capital appreciation. I don't care about dividends at all. In fact, I'd say if I was talking to a 25-year-old, I'd say don't put any of your money into the banks. It's the worst thing you could do. Anyway, another rant over. So an okay week, knocked down, I suppose. In the daily chart, it was a volatile week. So we started on Monday down 1%. Tuesday was up 1%. Wednesday up 0.5%. Thursday flat, and then down 1.4% on Friday. If you do look at the one now, or the daily chart, it's still sort of in an uptrend, but weak. Now, I very rarely talk about uptrends in the weekly chart because in the long term, it's always going to be in a long-term uptrend. Now, the only time I might have gone differently is back here in 2000 during the GFC. You might have said, well, short-term, a big, long downtrend for like over a year, but then we went back into the long-term uptrend. And so that long-term uptrend has been in play now for 15 years. 15 years. Jeez. So daily chart, looks, as long as we remain above 7,500, I'll be okay at this point in time. And then, of course, when you look at the hourly chart, which I'm looking more and more now, you get a different perspective. And this perspective does look bearish. And you just note, I might have said this in another video, so the SGO has been in uptrend since about October last year. And every time we have seen a little bit of dip to just below the longer-term moving average channel, just below this blue line, whenever we're seeing the SGO fall below that on the hourly chart, you can just see it rallied. Here, did it here, did it here, did it here, sort of did it here, but it was a very weak rally, and we didn't see another high. And then, yeah, it's failed. So it has turned short-term bearish or negative. And again, 7,500 will be an important level, not only on the daily, but also the hourly chart, because that was the last significant low. And it looked like we might have been heading to it because of Friday, but who knows? Yeah, I have no idea what's going to happen in the future. But it's all about probability. And at this point in time, because this looks a little bit more bearish in the short term, there is more or possible or higher chance of downside in the short term. But in the long term, so we talked about years and years and years, I'd say the XJ would be higher than it is now, just based off probability and the very fact that indices rise through time. Now, should I even look at other indices? Because they're all going to be almost the same. This is the XSO hourly chart. If you look at the weekly, probably not as bullish, but it's still long-term uptrend, very long-term uptrend, sort of. Less uptrendish than the XJO, but if you look at the monthly, so referring. If you look at the monthly, yeah. Apart from just prior to the GFC, we just saw, small caps was the place to be. If we just take or smooth it out, it's going up through time. That's probably the best way to. If you smooth out the volatility, XSO is going up through time, but not as good as the XGO in terms of trends, and still in this trading range. Try to get above it. This is the daily chart. Still in this trading range, and it's been in for about 2 years now. And that's all I've got for the Australian market. Now, the NDQ or the NASDAQ. This is the daily chart. Well, weekly, it's going to look really good. Weekly chart looks pretty good. This is the definition of a long-term uptrend. In fact, if I go back further enough, I should put this to a logarithmic chart. There we go. Let's do log chart. There it is. There's the log chart. Beautiful uptrend. There's only a little bit of a dip during the GFC. A big dip during the tech bubble burst, but overall, long-term uptrend for the NASDAQ. Now, I don't want to look at the log charts when I'm not looking at the long-term or the short-term. And if we look at the weekly chart for the NASDAQ, a really down week, bad week last week, down 5.4%, which was one of the worst weeks we've seen for a while. In fact, all the bad weeks we typically see is when we do see a fair bit of weakness in the market because, again, fear is much more powerful than greed. So we see much more severe falls or quicker severe falls than quick runs. So bull markets tend to last longer than bear markets because fear is much more powerful than greed. Now, that's not exactly true for everything. For small caps, it's sometimes, particularly for mining companies, something like that, it's particularly if the company releases some good news and there's a lot of momentum in the company, greed drives those scenarios instead of fear. Although you might say fear of missing out could be the driving force. So even those situations, fear is driving that rally or that momentum in the company share price. So again, fear wins out in the end. It's much more powerful than greed. Okay, so down a lot last week, and then NASDAQ up 4% this week. And that was mostly helped because of, I suppose, Tesla, Alphabet had good weeks, good results. Well, Tesla results weren't good, but yeah, it's not about the results for Tesla. It's something else. Okay, and then the minute chart, hourly chart, not minute chart, hourly chart for NASDAQ. Just like the XGO, this looks bearish in the short term. Looks bearish in the short term, but a nice little rally in the last few days means, yeah, it maybe this is just the dead cat pounce. Probably see that in the daily chart. Yeah, daily chart actually has rebounded off the longer term moving average channel, so maybe that is a support area. And yeah, it was actually a good week. 4 up days versus 1 down day. Oh no, 2 down days. No, 4 up days. 4 up days, 1 down day. Russell 2000, which is sort of a small cap proxy, is fairly similar to the XSO when you think about it. This is the daily chart, weekly chart. Better uptrend than the XSO over time. And the Dow Jones is bullish, although the week wasn't that good, not as good. So the Russell 2000 had a good week, up 2.8%. Dow Jones was up 0.7%. So the Australian markets significantly underperformed the American markets, and maybe that's because they had a really good Friday, we had a really bad Friday, and we're going to catch up hopefully a little bit on Monday. And Nikkei, I'm assuming Nikkei is down. Nikkei has just had a little bit of a correction, short-term correction, a little bit of a pullback. Correction may not be the best word here. So maybe now is the time to get interested about Japanese companies. And yeah, let's have a look at some other indices around the world. Why not? I thought I might. Oh, DAX. There's the DAX. DAX looks pretty good on the daily chart. Nothing wrong there at all. The FTSE. Oh, FTSE looks really nice little breakout in the past few weeks. FTSE looks interesting. Time to buy some FTSE stocks like who knows? I have no idea what's on the FTSE. English companies. And Hang Seng. Oh, Hang Seng. What's been happening, Hang Seng? Oh, possible little bullish run. This will look better on the 1 hourly chart. Yeah, nice. Hang Seng's looking nice. China 500 index. Okay, let's go back to, well, not back. So we're done with the indices. Overall, nothing to be concerned with. That we are not in a bear market right now. I don't think anyone says that. I'm listening. I am right now. I am in my Ausbiz the Core. I am up to March the 14th. So it's really interesting to get these professionals' insights where the market is now when you're almost 1.5 months behind. So back then, they was talking about, this was Henry Jennings and Andrew Weinstein, talking about how frothy the market was. So actually, let's have a look at where it was. That particular episode was the 13th of March. So back on the 13th of March, we're talking about, well, that's the 1 hourly chart. 13th of March. Yeah, we're still in a nice uptrend, just shy of the all-time high, which was towards the end of March. So, but yeah, 13th of March, the XGO was in a beautiful uptrend. And I'm talking about everything being frothy, but I don't know about that. If everything was frothy, if there was exuberance in the market, there'd be way more IPOs and that sort of thing. There's not. So there's still a lot of concern out there. Okay, back to indices, and we always start, well, I always start, don't know what you do, but I always start with gold. A daily chart for gold looks stunning. Nice little pullback, but I'm not concerned about that sort of pullback. We always need to see pullbacks in uptrends and bull markets, so I'm not concerned about that at all. But the main thing is the gold did bounce off the short-term moving average channel. So that could be a sign that short-term moving average channel is an area of support. And you can probably see that just by looking at 1 hourly chart here. Yeah, it bounced off it really nice. It took about 10 hours to bounce off it, and then it's sort of trying to move higher. We'll say at this point in time. I'd like to see a little bit more strength in this uptrend. I'd like to see it get to, say, about at least past 2,350, and then I'd like to see a new high eventually, and that's 2,430. But not negative in gold at this point in time, but it just could be just a bit of a breather in the sector because it's run up. It did run up really nice before that. Let's have a look at iron ore. Iron ore has rallied nice, but again, this could be just sort of a dead cat bounce. So the opposite of buy the dip opportunity. So it fell quickly, quite ferociously, possibly, and then it's just bounced back into the short-term moving average channel, and then it's been going sideways, which is telling me there's not much strength right now in iron ore. And you probably see that in the hourly chart, just a consolidation period, and fairly, yeah, this is like a sign of liquidity, just these candlesticks. Even in the 1 hourly chart, you can see it. And so I wouldn't be surprised to see a little bit of pressure on iron ore moving forward. But yeah, it's a commodity, so just don't know. Back to, we won't have a look at uranium, but uranium's still below 90. Oil is in, we'll say, a daily uptrend here. Nice little pullback, just like gold. Still in an uptrend though, and the 1 hourly chart probably shows the same thing. Nice little pullback, and then it is starting to move higher again. So nothing to be concerned about when it comes to oil. Lithium, won't look at lithium. However, the commodity of the day for probably for the month is copper. Copper looks absolutely stunning. So copper is, and again, at an all-time high, not an all-time high, a long-term high. Last time it was this high was back 2 years ago in May, June of 2022. And just the chart looks pretty good. Daily chart looks great. I wonder if the weekly chart, I haven't looked at the weekly chart. The weekly chart looks pretty good too. And the daily chart would absolutely look brilliant. This is the sort of chart you want to see. It's in a short-term uptrend, a 1 hourly uptrend. And whenever we see copper dip towards the 150 minutes move or 150 hour moving average, which is this solid blue line, it's acting as support. It's done it now about 5 or 6 times in this uptrend cycle. So that would be the key level of support for copper, is just this blue line. And up until then, copper is the place to be. Coal, I'm keeping a close eye on coal, not the hourly chart, just the daily chart, because I do think we have seen a low with coal. I'm pretty sure that's thermal coal, Newcastle coal. Could be wrong. And what else do we have? Nothing there. But let's have a look at some of commodities that are not in my video technical watch list. Palladium. No, I don't know why I've got palladium there. Tin. For tin, we need to look at a line chart just to make it look better. Tin, there's a little bit of pullback. I'm interested in Metals X simply because of this chart here, and Metals X has pulled back. Do I have Metals X in my technical update video? I'm not sure. Cocoa, cocoa still going up, and what else? I suppose we can have a look at uranium. If I can find it, uranium. Yeah, it's still uranium is weird at the moment. It's not showing any strength, but not weak. I'd say going sideways now. If it falls below 82.50, that would be a sort of a bearish signal. And what else? Haven't had a look at silver for a while. Silver should be good because it's gold proxy. Oh, a little bit of a pullback in silver. And what else? I think that might be it for commodities. And we'll go back to the candlesticks and let's have a look at Bitcoin. This is a nice little consolidation period, looks like, for Bitcoin. That's the important level right there. In fact, we could put it down a little bit. I'll put it just there. That's the important level for Bitcoin. So no reason to be concerned if you're a Bitcoin holder right now. Decreasing volume, which is interesting. But again, if it breaks above 74,000, that would be bullish. Breaks below 60,000 or so, that would be bearish. And let's have a look at the 1 hourly chart, by the way. And nothing in the 1 hourly chart, nothing to get excited there, so no trade there. And finally, let's have a look at bonds. Just have a look at the 30-year bonds, and it is in an uptrend. So remember, the market got really excited back here in late last year when they thought there was going to be 6 billion or trillion interest rate cuts in 2024, and that's obviously not going to happen. And that's why bonds are now rallying. And if they keep going, we're going to see bonds get back above 5%, 4.8 or 4.78% right now, down as low as under 4% back in December, and so it's up 20% since then. And even in the 1 hourly chart, this is just like copper, I would assume. Yeah, a nice uptrend in bonds. So no trend in sight yet. Okay, so let's have a look at some of the companies in my watch list. Some companies' charts that look okay or interesting, or I'm paying more attention to these companies because the share price has dropped significantly in a fairly short period of time, and there might be a bounce. That sort of thing. So I've got 11 charts here, I think, and I don't have Metals X. I'm going to put Metals X there. And then when I finish this portion, I'm going to also have a look at some of companies that are in my short-term portfolio or my technical portfolio, and I'll discuss whether I'm thinking of selling those just based off the chart, or maybe buying more. Who knows? So first company I want to talk about is Chrysos Corporation, a company I have owned in the past. And I'll have a look at the daily chart and the hourly charts for these. A beautiful uptrend. And that was one of the reasons I bought into this company. It was a beautiful uptrend. I sort of like what they do. I think I discussed about what they do in my previous video, either yesterday or on Friday. And it was just a nice chart. And the reason I sold was just a technical signal. It was just this little drop in share price here over a few weeks. And we didn't see much of a rally after that. A short rally, but that's it. And at that point in time, I thought the uptrend is over. But because I do like what this company does, I follow their not the fortunes, but I follow their releases quite a bit. And whenever this company releases anything, I will have a look at it. They released their Appendix 4C during the week. The market the market initially was nonplussed because on the day they released their Appendix 4C, which was the Tuesday, share price only fell 4.67%. You might think that's a fair bit, but the next few days, the share price absolutely collapsed, down 12.4% on Wednesday, another 8.9% on Friday. So this looks really weak, but I would expect there to be a bounce. The other thing you look at is volume, some high volume coming in. And the reason I say there should be a little bit of a bounce, I'm not sure how powerful the bounce is just by looking at RSI. And it does look oversold, significantly oversold. And the last time it was significantly oversold was at the bottom back in January. And then we did have a bounce. In fact, the bounce was was over 10%. So I do expect a bounce here with Chrysos, but RSI doesn't always work. So if we go back to August last year, it was overbought on the 21st of August right here. And if you sold because of that, yeah, you made the wrong decision because the share price kept on going higher. So you got to use everything. You can't just look at one indicator and make decisions based off that. But I do think there is potential because it has sold off in a very quick time period that there could be a little bit of a bounce. If there's not a bounce, that's actually really bearish. That means no one's seeing any value in the company. And I think the main reason is just because they're Appendix 4C. Okay, so that's Chrysos. Mount Gibson. So Mount Gibson, I have been paying a little bit of attention to. This is based off the 1 hourly chart. It did look interesting the last 2 weeks or so. Looked like it just wanted to get into the uptrend. Remember, iron ore went on this little bit of a rally, and it is going sideways now. But the funny thing with Mount Gibson is the share price, and the chart looks actually bearish. Has pulled back from 48 cents to 43.5 cents. Some big volume coming in the last few days. And so I'm not sure why there's a bit of weakness in Mount Gibson. They did release their quarterly report. Wasn't that bad. I wouldn't say it's absolutely shot the lights out, but so my potential buy in Mount Gibson is now just to wait and see what happens. And I just think maybe there's a little bit of weakness in iron ore possibly moving forward. But again, I'm trying to think ahead what iron ore might do, but I could be completely wrong. That's why I just want to wait and see what happens. Another company fairly similar to Chrysos is Duratec. Not quite a significant drop in share price, but I did take a trading position in this company back in about a month ago. Bought at $1.11, and then I sold about a week later at $1.24, $1.25. So a nice little 10%, but I'm just expecting a bounce off this support level. Got the bounce, and now the share price has fallen significantly on strength through that support level at $1.08. Share price is now at $1. Couple of things to pay attention to here. Some nice buying late in the day on Friday, and we have seen we have seen some higher volume coming in. And I'd say that higher volume is a value investor seeing possible value, and $1 is a powerful number. So the share price of Duratec closed at $1. In fact, it bounced up to $1. You can see that just in the 1 hourly chart. A nice little bounce in the last hour of trading. Share price actually got down to as low as 96 cents in the last hour, and then there was a bounce. So if we even go even further, 5-minute chart, in fact, the bounce happened in the last 15 minutes of trading or 20 minutes of trading. So different perspective. If you just based your trades off the 5-minute chart, you wouldn't be thinking about this. But the highest volume came in that last 5 minutes. So there were some value investors who saw it get down below $1 and went, ooh, there might be some value here. So that's the main reason I am following Duratec now, is I do possibly see some value. Market cap 250 million, price earnings ratio 11.5. A few things I didn't like about the last report, mainly to do with margins, if I remember correctly. All right, so that's Duratec. Now to Cettire. So the hourly chart looks horrible, and it's definitely in a short-term downtrend, but you can see a wild ride for Cettire and the shareholders. Lots of positive momentum in this company back in February. That momentum died when the company had some issues, ongoing issues with AFR. Seems like AFR is shorting Cettire right now. Fairly similar to short attacks against this company. That's what AFR has been doing, but I'm fine with that. They're journalists. That's what they should be doing. Finding things that are wrong in companies that maybe the market is missing. And AFR and some of their journalists have helped me in the past by doing exactly that. So I have no qualms with AFR, but it's interesting. But the reason I have featured Cettire in this video is when you look at the daily chart, there's a well-defined uptrend. A pretty significant uptrend. So I'm taking away all the moving average channels here. And you can just see this uptrend is portrayed by this upward sloping dashed line. And whenever the share price hits this dashed line or gets very close, you see the share price rally. So we're talking about 1, 2, 3, 4, 5, and now the 6th time the share price of Cettire is right on this trend line. So that's why I'm interested in Cettire right now, for a possible bounce off this trend line. Now, the question is volume. So not a lot of volume coming in the last few days. If you look at the week, I'm probably assuming the week is, weak volume. So lower volume coming in the last 4 weeks, so decreasing volume. That's a sign selling, or there's less pressure when it comes to the share price because there's not as many sellers out there. And I think maybe the reason is because as the share price falls, you're going to see more and more shareholders saying, or more and more investors saying, well, there might be value in this company. Not sure, I don't like what I've been reading in AFR, but maybe Cettire's share price has fallen enough that there might be value in this company right now. So possible support for Cettire at current levels at $2.90. And the share price, I was going to say it has halved, but it hasn't. Halved will be 240 from its highs of 480. But I think with this sort of company, you have, particularly if you're holding for the long term, you have to be comfortable with the volatility. This company's share price can be quite volatile. Okay, so interesting happenings with the next company, Integrated Research. And I might be on the cusp of calling this a bit of a breakout. And the funny thing is, this breakout looks like it happened potentially on the last day of trading when the overall market was down 1.4% of where it was. Integrated Research was up 6.5%. And this comes after last week. It looked the complete opposite. It looked actually fairly bearish on the last trading day last week, leading into, I believe, Monday, the share price of this company, no, it was Friday last week. Share price of this company got as low as 33.5 cents. Now it's 41 cents. So a really good week for Integrated Research. Share price up 17% after being down 10% last week. So the weekly chart, don't get much out of this, but you can see share price sort of going sideways during the past 2 years. So nice consolidation period. Now a little bit of volatility in the end. You can see that in the daily chart. A little bit of volatility, but a few things here. Notice how the two moving channels have merged or combined together. That's a good sign. That's a signal I do have, one of my signals. And that means the long-term downtrend of this company is coming or possibly coming to an end. Now, we will need to see the share price remain at these levels, hopefully even go higher. And that would indicate to me that there is a sign that the sentiment and the trend in this share price is going from negative to positive, even for the long term. I played this with Gentrack a few years ago, and that has played perfectly. And the other thing is, notice some big volume coming in during March, late February, early March. That would have been around the time the company released the results. And that is, again, a sign Sometimes volume precedes price action. I'm going to say that from now on. And we've continued to see some okay volume since then. But I think this is starting to look pretty good for integrated research. And I think there is a possibility this could be a really good turnaround play. I won't say it's going to be like Gentrack. For those who don't know Gentrack, I'll show you the Gentrack chart, which is approaching a possible sell, by the way. So if you look at Gentrack, it broke out 2 years ago. November 2022, broke out just about $2. Now it's $7.56. And that was after a long period where the share price just went sideways. Not quite the same. They're all different as integrated research, but I'm seeing the same signals. And integrated research, I don't think you could even think this is expensive. The market cap is 72 million. And if you look at last year, or that last half year, $40.8 million of revenue, $11.2 million of profit. So nice improvement from the last few half years. So there is signs that this is starting to turn around integrated research. So I do have a position in this company just because of what I'm seeing on the chart here. And a nice, really nice day on Friday. And the last thing I should look at is a 1 hourly chart. So it's a little bit of a dip. I was concerned about this dip in the last week, but not a lot of volume with that dip. In fact, a much lower volume than what we usually see with this company. And then for some reason, share price has just rallied since then. I don't know. Market can be weird at times. I'd say during that dip, there was a little bit of panic selling by some shareholders, but this chart is starting to look good. Okay, company, I don't know, Chorus Limited. You can see why I put this company onto my watch list is just where the share price is right now. Possible double bottom. Possible little dip, not dip, possible what do you call it? Oversold rally, short-term rally here for Chorus. Share price currently at $6.50, which was the lows we saw back in late last year, October, November last year. And if there is a little bit of a rally, oversold rally, can I get at least 10% out of this? So 10% would mean $7.10, and I actually could see that. So possible trade here for the short term. So this is the daily chart. Other than that, nothing to be excited. Weekly chart. Long-term uptrend. And the thing I like about this chart is whenever the share price gets into that green long-term moving average channel, which has that blue solid line in it, it is acting or has acted as support, but now it's fallen through it for the second time in the last 6 months or so. So possibly this long-term uptrend for Chorus is coming to an end. According to TradingView, this company has a price to earnings ratio of 201. This is an infrastructure company, I believe. Telecommunications infrastructure company, yeah. So don't look at PE ratios for infrastructure companies. And to be honest with you, one of the main reasons I do this video, this channel, is to share ideas. And to be honest with you, I wouldn't buy this company anyway, even for a trade. That's just me. But I can see a little bit of a bounce. Just because I won't do something doesn't mean you don't have to. Okay, let's move on to PeopleIn. Well, this is a bearish. This is going to be a bearish take. So this is the weekly chart for PeopleIn. Share price has been as high as $4.80 back in, say, the middle of 2021, as low as $1. We saw $1 hit during the COVID-19 financial panic. So that level is a very important level for PeopleIn. I know I've mentioned this a few times in the past 4 or 5 months, because when we transitioned to the daily chart, there was a bit of a share price plunge, or maybe not a plunge, but the share price hit $1 back in December last year. You can see the day that the share price fell below $1, in fact, it closed at 97 cents. There was massive volume on that day. In fact, there was massive volume preceding that, the previous 2 days, and there was massive volume the next few days. That was a telltale sign of a bounce. That was a telltale sign that the bottom has been reached. We saw a lot of buying coming in, which means there was probably value investors who just love $1 for some reason, and that's why the share price rallied. Now, I bought in on that day, and then I sold out maybe a week later. It was under a week, when the share price rallied back up to $1.20. So a really quick 20% gain. And this strategy has worked wonderfully well for me. I'm always nervous when I do these trades, but there hasn't been a case where it hasn't worked. So it's just getting out when you have to get out. And I got out, saw share price rally to $1.40 in February. I went, I was like, oh. But then the share price has fallen back down to $1. So why have I included PeopleIn in today's video? Let's have a look at the 1 hourly chart. And there you can see, because this 1 hourly chart goes back to when the share price last hit $1 back in February. I think someone did ask me, am I going to buy back into PeopleIn because it's gone back to $1? And I don't think I responded, but I said no, because I don't see, even though there was large volume, the whole reason why the share price plunged on that day, 17.4% down, was because of a negative financial result. So I'm not going to play a little bit of a bounce here. But there was a bounce. Share price rallied back up to above $1.10. So there was a nice 10% rally, but ideally I want at least a 20% rally. I would have taken 10% in this case though. And yeah, and then share price hit $1 again on the 8th of March, $1 again on the 19th of March, $1 again on the 16th of April. And in each time the share price has rallied. But what's happened on Friday? In fact, on Wednesday, the last hour of trading, share price fell below $1 for a brief period, and then share price went up above $1 and closed above $1. But in the first hour on Friday, share price collapsed. It fell 4%. Share price closed at 97 cents in that 1 hour, and share price kept on falling during the rest of the day, and the share price closed at 95 cents, which means this might be an all-time low. Closed at 94.5 cents, according to this. It says 95 cents here. Now, during the GFC, share price did get below 94 cents for a very brief period of time. So the share price low was 90 cents. So that was for a very brief period of time in one a day, and then the rally was extreme. This was sort of a buy the dip rally. That was a perfect oversold rally. Nice, 100% rally. Jeez, wish we had those times again. So this is just a possible break below $1. So interesting times ahead for PeopleIn. Company does look really cheap, but it might be looking cheap for a reason. A market cap is below $100 million. Wow. Dividend yield 10.5%. P ratio below 10. The market's just not convinced by this company. So I think still there could be a scenario where value investors just what I looked at there, just see really good value in this company. Wow, I'm going to buy this company because it looks really cheap. And that could lead some support to the share price where it is right now. Apiam Animal Health. So I'm really interested in small cap companies. In fact, right now, the best sector for me and my investment style is small caps. Particularly profitable small caps are doing wonderfully for me. So we're talking about Adrad, Stealth Global, Visan. We're probably missing a lot of other companies there. So a lot of these companies are doing really, Shape Australia, Southern Cross Electrical, COSOL, all doing really well right now. And Apiam might be in that list. However, I don't think it's as good as of quality as those other companies. Wouldn't say those other companies are high quality companies, but I'm a little bit more wary of this company. Now, in saying all that, share price was in a well-defined downtrend, and I think sentiment has shifted slightly or moderately for this company. And it was on the back of the company's half-year results that they released on the 23rd of February. On that day, share price rallied 25%. But the market's just not sold yet. And the rally was into a resistance area, which is that long-term moving average channel. And it's not surprising the share price hasn't really done much since then. However, share price has rallied to 40 cents in the last few days. Now, 40 cents is an important level because that was a high we saw on the day they released their results. So this could be a budding breakout or potential breakout. Apiam Animal Health. The last time share price got above or was above 40 cents was during that well-defined downtrend back in September of last year. So things look like they are turning around for this company. Now, Apiam Animal Health is a profitable company. Markup 73 million, dividend yield 2.5%, says price earnings ratio 26.2%. Now, in the last half year, just going to have a look at it here. $100 million of revenue and profit of 3.3 million. I'd like to see the margins increase for this company. Okay. Next, Telix Pharmaceuticals, mostly because the chart looks absolutely brilliant. And I am a shareholder of this company. And the chart looks good. Chart looks really, really good. Daily chart looks good. Weekly chart looks good. This is exactly what you want to see in a weekly chart. And the hourly chart looks good. So looking good in all different time frames. Now, possibly, again, if I put RSI here, possibly overbought. Look at the daily time frame. Yeah, it's moved into overbought areas. Now, last time this company was overbought was way back in April last year, so a year ago. It was overbought for a long period of time, and that it was not the time to sell because it kept on increasing. Well, not much, but yeah. Anyway, so Telix Pharmaceuticals looks really interesting, but you have to pay for this company. Markup is approaching $5 billion. But in saying that, look at this revenue growth. So revenue growth has gone from $4.7 million in the second half of financial year 21 to $281 million, and the company is profitable. That's why there's a high valuation, just because of that significant growth. So this is one of those companies that I don't follow the chart all that often. And I had a look at this chart the other day. I was a little bit surprised what I saw. I went, oh, wait, this looks pretty good. And RPM Global, I actually did get a question about RPM Global on my Twitter. So I answered that. I don't get many questions on my Twitter, and I answered it. It was about the chart again. Yeah, it was just about the chart for RPM Global. And then I had a look at the chart. I went, this is another company I own, one of those small caps, profitable small cap companies that's doing wonderfully well. Completely forgot about this one. Yeah, this chart looks brilliant. Beautiful chart. This is exactly what I'm looking for in a company. I like what they do, and the chart looks absolutely amazing. An all-time high. Might be an all-time high. Let's have a look at the weekly. Yeah, all-time high. So the weekly chart looks beautiful. Daily chart looks beautiful. And I think I actually said this is a beautiful looking chart for RPM Global. Even the hourly chart looks beautiful. So a little bit of weakness back here in the hourly chart, but look at that. Just price has taken off. And I'll just go back to the daily chart. Sometimes I forget to look at volume, but look at the volume. When the share price moved into this uptrend, look at that high volume coming in. I won't say there's continued high volume, but higher volume than what we saw before the uptrend started. And finally, Metals X. So this is my, or not my, but a potential tin. I'm pretty sure this is tin. It's not nickel. I'm pretty sure it's tin. Tin, yeah. Operation of tin mines. There we go. And we have seen a pullback. So we have seen a pullback. Share price has dipped in the past week. In fact, if you look at the weekly chart, share price has pulled back 7.4%. And from its highs, the share price has fallen 8 cents divided by 52. So we are talking, what's 8 cents divided by 52? I can't do that maths. 8%. What's the way to do that? What's 8% of 52? It's not 8% of 52. It's 8 divided by 52. And that would be about 8 divided by 52, 7, 14%. Let's see how right I am. Roughly 14%, but that's completely off. 8 divided by 52. It's probably going to be like 15%. Okay. I was wondering, is it going to be lower than 14%? Yeah, 15%. So share price of this company from the high has dropped 15% in the week. Now, I've been waiting for a really dip. I saw the dip I was waiting for back here in March, but I just didn't hit the trigger. If you look at the 1 hourly chart, I'm a little bit more interested in this, sort of a little bit of a dip here. So a potential buy that I might make during the week is Metals X, because tin looked like it was trying to move higher. And I did mention I was going to have a look at some of my technical holds right now, particularly those at the top of the list, which I've held for a longer period of time. So let's have a look at whether I am thinking of buying or maintaining a hold, not buying, selling or maintaining positions in this company. First off, Service Stream. And I've mentioned this, I'm wanting to sell this company, but technicals are not showing me any reason to sell. So this is the hourly chart. I'll start the daily chart. Daily chart looks pretty good, no reason to sell. Daily chart looks pretty good, no reason to sell. We've got a sell point at $1.20. It hit $1.20. Well, the reason it's $1.20 is because it hit $1.20 quite frequently late March and early April. So I obviously lifted my sell price to that point. So if it falls below $1.20, that would be negative. But yeah, there's no reason I see at this point to sell my position in what's it called? Service Stream. Now, is this a high quality company? Would I own this company for the long term? No, this is just a trade. And this is why. Now, if you look at the weekly chart, it does look like things are turning around. Look at the volume, huge volume coming in. So I have no doubt there are fund managers now buying this company because of some reason, but this is definitely not a high quality company. And Hub. So I've held Hub since the breakout after the release of the results in August last year. We did see a pullback during the first part of April, but there was no reason to sell out. But I am at the point now with Hub24 of thinking of selling out just based off the 1 hourly chart. So making more decisions based off the 1 hourly chart. And you can see share price of this company was in a beautiful 1 hourly uptrend from late November or middle of November, or actually start of November, all the way through to recently. And I am seeing weakness in Hub24 right now. Now, I do have a sell position at about $39. It fell through $39 on the 19th of April, but rallied really nice on Monday. Yes, I waited to the next day just to see if the share price remained below $39. And that's why I don't have stop losses, because I don't want to make a decision just based off that one moment in time when the share price of a company might drop below that one price. I want to see what the share price does a little bit after that. So I just waited one day and the share price rallied. I should have sold when it rallied back to $41. So it's looking much more bearish for Hub24 and definitely closer to a sell than not selling. And Bravura. So this is another company I've held off and on during the past year. I've held since December, so not that long. But this is another company where I've got a more than 50% gain. So I am looking for reasons to take profits in this company. On the daily chart, yeah, share price not much doing much, but it's still in an uptrend. But 1 hourly chart, share price just going sideways, sort of what you see in that daily chart. But you definitely get the sense of a consolidation period for Bravura. And I've got my sell point at $1.30. So still well above that at this point in time. And I wouldn't be surprised to see the share price get above $1.50 soonish. And particularly if the company releases a really positive financial news, say a profit upgrade. If they release a profit upgrade, this would be absolutely ideal for Bravura Solutions. And what else? So quite a few smaller companies here. So we've got Oversold, Shape, Austrad, Adrad, and more illiquid, some of these companies, but I'm not thinking of trading at those companies at all. Fisher & Paykel is an interesting one. So this is getting back to an instance when a company is in profits like Service Stream, I'm way more comfortable just waiting and making that decision because I'm high in profit in this company, over 50% gain. So I'm willing just to let it simmer. And even though I want to sell, there's no reason to sell. And I've kept pushing up my sell point. It's now $1.20. Now, with a company like Fisher & Paykel, which I bought on the 22nd of March, so just over 1 month ago, the share price did fall below my position, and so actually fell below $23. So I bought at $24.01, sell below $23 a week later. So this is an instance where I'm following the share price movement much more closely than I do with Service Stream. Service Stream, I'm like, might look at that once a day, even, maybe once a day. So all companies in this portfolio, I look at once a day. But some of these companies I look at a little bit more, particularly once I bought them. I will follow the share price movement a little bit more closely. So I was following this one a little bit more closely, but I want, again, I want to give a little bit of time to these positions. And so I might have been fearful. I might have hit the sell trigger a little bit too quickly and sold on the 5th of April. And the share price in the chart is starting to look pretty good for Fisher & Paykel. So it did fall by 0.9% on Friday, but the previous day, share price rose 4.5%. So the chart is starting to look really good for Fisher & Paykel, and the 1 hourly chart looks pretty good as well. Yeah, 1 hourly chart looks good. So this is an instance where just after I bought, I'm paying closer attention. Now I'm seeing myself paying less and less attention to Fisher & Paykel because the position is now set. And once I do raise my sell price, and I raise my sell price to say $24.60, that means I will be in profit no matter what, unless the share price collapses in one day. That's the only instance. And probably my favorite chart right now in all these is Southern Cross Electrical Engineering. So let's have a look at the daily chart. Beautiful chart. There's my buy, bought at $1. I was a little bit not hesitant because the share price rallied from 90 cents to $1 fairly quickly. But the reason I bought $1 is because the share price just went sideways just leading up to the day. So I waited about 4 days after that really big push up on the 19th of March. Share price on that day rose 6.9%. Just waited because there's no selling the next few days. And share price just remained at $1. So I bought it at $1. And this is an instance when the share price has not been lower or below my buy point, and the share price keeps on rising. Keeps on rising. A lot of positive sentiment in this sector and in this company. And I'll show you the other companies that I have in this sector. They're sort of related, but they're sort of not technically in the same sector. So that's a bad thing to say. And the alley chart, by the way, alley chart for Southern Cross looks brilliant, brilliant. In a way, I did buy just after the breakout. So if you just look at the hourly chart, so if you just put a line right there, these two highs here at 96 cents. So I did buy just after that breakout. So you do get a different perspective, just look at different time frames. Yeah, in fact, even look at the daily chart, that was a breakout. The breakout happened on that day. It rose 6.9% on the 19th of March. So the other two companies that I do have, I actually don't have, well, this company I do have, but the other company I don't have. So Genus Plus, and this is in my this is not in my trading portfolio. I have traded this company in the past, and even companies. This is my small cap portfolio, but even companies in my small cap portfolio, I will have sell points. So for Genus Plus, it's $1.64. Probably might lower it a little bit more. There it is, we'll say $1.62. And this chart looks absolutely stunning as well. Beautiful chart. The reason this is not in my technical portfolio is I want to give this a little time to breathe because I hopefully plan to own this company for 5 years. And you might say, why do I have a stop loss? It's just to protect my capital for instances where my thesis just goes wrong. And I should probably put it down here somewhere just to give it more room to breathe. So I bought at $1.40 or below $1.40. So that's around the price I bought. And the other one, which I've been doing a little bit of reading because someone recommended or shared this company with me in the answers and questions video, Mayfield Group. This company does look interesting. I might do a standalone video on this because there was one little sentence in their half-year report. They didn't do a presentation. It was in the half-year report, their financial statements, which piqued my interest. It was just one sentence. That's all it took for me to go, ooh, I am thinking of taking a position in this company. I'm thinking real hard. And that is Mayfield Group. One sentence. I should do a standalone video on that. Just that one sentence. Okay, that's all I have for today's video. Probably a little bit longer than I wanted it to be, but that's okay. So if you have any questions, any thoughts, just leave in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.